Forbes reports Citizens, PNC, UMB stock plummet after First Republic's epic failure. PNC Bank is closing 47 more branches in 15 states. PNC closing 20 more branches in Maryland. PNC Bank to close one of its downtown branches, according to the Indianapolis Business Journal. PNC Bank shutters 5 more Philadelphia area branches as it continues to prune its footprint. And PNC Bank has closed nearly 19% of its branches in Philadelphia area since the beginning of the pandemic. I've been getting a lot of questions asking, Kevin, is my money safe in the bank? Should I take my money out of the bank? What have you done with your money? Are you leaving it in the bank? Well, we've discussed PNC Bank before. We've had some insider intel from PNC Bank shared with us by some viewers of the channel, some supporters, some subscribers, boots on the ground intel, as well as many other banks, Wells Fargo, Chase Bank, Bank of America, lots of different banks, Renaissance Bank, Truist Bank that we've been going over. And I want to share some very important information with you guys to help you guys have a better idea and understanding of what's happening, what's going on in the world around you, the business world, the financial world, the investment banking world. Thank you guys again for joining me on another video. My name is Kevin, Kevin, in all caps, youtube.com/@Kevin247. Please smash that like button and subscribe if you haven't already. Turn on your alerts and notifications. And even if you are a subscriber, double check and make sure you're still subscribed, because apparently YouTube has been unsubscribing people without their consent. Now, I want to share something with you from another fellow content creator. He goes by the name of Keenan Grace, and he's a very, very smart, intelligent young man who is providing a ton of value and information when it comes to investing. I want you guys to pay attention very closely to what he has to say here.
So I seen something funny on the internet the other day that just showed me that we all got to build our wealth up, family. And what was that? It was this. Unusual Wealth, shout out to my dog, said Bernie Sanders. And again, hold up. This ain't about the politics, family. This ain't about the politics, but this is about the powers that be. They know how to make money, but then they do other things that kind of keep you from making your own money. But let's keep it going. It says this: Bernie Sanders doubled his income last year by writing a best-selling book that condemns capitalism. Family, that's the good old do as I say, not as I do. So what we got to do is we got to think, how are we going to build up our own wealth? And that's what we're going to do. We're going to look at some stocks. I'm not telling you to buy, hold, or sell. I'm not your financial advisor, but I'm here to give you the facts so you can be the judge. And I want you to see exactly
now you heard
what
that,
I'm doing.
right?
And the stock that I'm looking at today is Tesla.
There is,
it has a whole lot going on.
There are people out here in this world who are delivering mixed signals. They're talking out of both sides of their mouth, okay? They're telling you one thing and they're doing something completely different. And quite often it's to your detriment. It's not designed in a way to help you improve, help you do better, help you have more money, help you build wealth, help you start investing. It's really more of a way for you to reject the system, to shy away from it, be afraid of it, expect to lose money, not want to get involved whatsoever, and merely continue on down this road in this life as a consumer, as a worker, as a 9-to-5, barely struggling to get by, keep your head above water, can't do any better mindset and mentality, because they don't want the masses to realize the truth. And the truth is that there's tons of opportunity, there's tons of possibility, and you have tons of capability. Now, granted, I may get some pushback on this, but I'm all right with that. I want you guys to know that you are capable, okay? Now, what you choose to do, that will be up to you. I'm going to provide you with the information. Do your own research, do your own homework. Only get involved, in my opinion, in things that you understand and things that you feel comfortable with. But with that being said, if you never take the opportunity to learn and grow, then you'll never understand. Therefore, odds are you'll never feel comfortable. I've come across a lot of different feeds here recently promoting and perpetuating an idea, ideology, a thought process, a mentality that is damaging to the masses, all by creators, content creators that you may know, love, and trust to bring you the truth. All the while, they're taking advantage of your trust. They're lying to you. They're telling you all the things you want to hear while continuously raking in tons and tons of money by doing it, and then taking that money and putting it into the market, building investments, utilizing the powers of capitalism. Do as I say, not as I do. I don't agree with it. I'm going to tell you guys the truth, nothing but the truth, the whole truth. You guys do with it as you may moving forward. Now, big banks have massive exposure. We're going to look at a review from Seeking Alpha of PNC Bank. And I know you guys may be asking your question. You guys may be asking the question like, Kevin, what are you doing? Why are you wearing a hoodie in, almost June in Florida? There's two reasons for that. One, the weather here is kind of changing. So I'm going to show you a picture of a little funny post that Justin put up the other day. Maybe this has something to do with the weather changing, but it's a little cool, a little chilly this morning, a little breezy, but also it's like 5:30 a.m. right now, 6 a.m. right now, and Central Standard Time, and everybody's still sleeping. But when everybody's sleeping, it's like 40 degrees in there. Michelle keeps it like frostbite. So I still got my sleep gear on because it's freezing in there. I came out here, it's still a little breezy, but it's going to warm up soon. Quite possibly we're going to hit the beach. We're going to maybe record some on the beach, do some walking talks, bring you guys along with us.
Race on. Hey guys. So here we are. This is the busiest part, sort of.
In this area,
Ish.
which is still 1/10 as busy as yesterday in Miramar Beach.
Talks or more walking talks or anything like that, just let us know. Thanks for watching.
Goodbye.
See ya.
But it says that large exposure to commercial and industrial lending. PNC's total commercial loans accounted for almost 70% of the bank's total credit portfolio. And this is one of the highest shares among the 50 largest U.S. banks. So this is going to fall into one of those categories that we would have discussed before as we're talking about diversity, security, and cash flow. But this is just a basic, simple, idea of don't put all of your eggs in one basket. Now, granted, if they had 10 eggs, 7 of them are in the commercial loans basket. Therefore, it's not all your eggs, but it's a majority of your eggs, quite possibly at a terrible time. I'm going to put this chart up so you guys can see a breakdown of PNC's commercial and industrial loans by industry. Commercial loans by industry, 70% of the bank's credit portfolio are in these sectors, okay? After we just discussed PNC Bank closing tons of branches, okay? Pay attention. Manufacturing, retail, service providers, financial services, real estate, technology, healthcare, transportation, all industries that you have heard of recently in the news. For what reason? They're not good reasons. And when a bank is 70% tied up into this in their credit lending, I would be starting to get concerned, okay? Changes in the macroeconomic environment can significantly affect commercial lending, okay? In addition to the Fed and adjusting interest rates, which we are on track to see another interest rate hike at the next Fed meeting, further pain inflicted on businesses and families by Jay Powell himself. And in the event of a severe recession, the asset quality of this credit category is expected to rapidly deteriorate, leading to significant rises in the charge-off and NPL ratios for the bank. I just saw a headline that Germany is officially in a recession. Now, granted, we're looking at a narrower focus of U.S. American banks, but I can tell you that what we see happening around the world is going to have an impact on us all. It will permeate throughout business, throughout the economies. They're all linked and tied together, some way, shape, or form. And high share of uninsured commercial deposits, as PNC's commercial deposits look completely different, as 80% of them are uninsured. Uninsured means that completely vulnerable and exposed. Huge exposure to risk. FDIC is not insuring uninsured deposits. And as a reminder, high shares of uninsured commercial deposits were the reason for both of the SVB and Signature Bank failures. Now, granted, we saw some extraordinary measures, much like the extraordinary measures that Janet Yellen is trying to pull off to fight this debt ceiling crisis, which some believe is actually just a talking point and will never actually happen. Which, if that is the case, why does our government do this to the American people? Why do they put undue and unnecessary stress on those who are already feeling extremely stressed and high levels of anxiety? Why do they do that? But those banks, SVB for one, Signature Bank, they receive special treatment. Granted, it wasn't a bailout. It's just how capitalism works, Joe.
They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works.
But they were made whole above the $250,000 FDIC insured limit. That is not sustainable. That is not a realistic possibility in the future. That is not going to be in place for banks like PNC if they were to experience a similar situation of going under and experiencing a bank failure and being shut down by the FDIC. Significant increase in expensive FHLB's borrowings, driven by parent company's senior debt issuance, and are quite expensive for the bank, okay? So you got a bank like PNC, heavily tied into commercial loans, 70%. You got 80% uninsured deposits from commercial deposits, while you're also experiencing higher senior debt and higher expenses. Today, a time like this, on the brink of a recession, a complete economic collapse and crisis, the last thing I would want to do is be tied up into a bank that is seeing their expenses increase as the likelihood and potential risk of loan default and NPL is on the rise as well, tied to these commercial loans and industries. Longer duration securities book could lead to liquidity problems. Liquidity problems in the bank is the worst possible thing that can happen to a bank. Silicon Valley Bank had liquidity problems because they had so many account holders and customers coming in to withdraw their money out of the bank. The bank wasn't liquid to satisfy these withdrawal requests, which forced them to sell off securities at a loss to make good on the account holders' withdrawals before being shut down by the FDIC. All the while, some of their employees, some of their senior ranked higher level employees were pulling their money out. The liquidity problem leads to a bank run problem, leads to a bank failure, leads to a collapse in a recession. Think about this, okay? We have been consistently warning about the duration. Now, this is from Seeking Alpha, okay? We have been consistently warning about the duration mismatch risk in our previous articles on large banks. For SVB, the risk has materialized and led to its failure. PNC is a good example of how large U.S. banks still have duration mismatch risk due to their longer-term securities portfolio. That breaks down to say that PNC is literally doing the same thing that SVB did. And if PNC is doing the same, if it walks like a duck, talks like a duck. Meanwhile, headlines are being shared of all these bank branches closing. Read the writing on the wall, folks. The recent bank failures have already demonstrated that such a longer duration securities book is a major risk. And we see headlines here, bullet points. Operating efficiency is worse than that of its peers. Capital adequacy ratios look low, especially when adjusted for AOCI. PNC has a number of issues which could come to foreground in the event that the market begins to move into a difficult economic environment. I think that we're on the verge of a very difficult economic environment. Would you agree? The bottom line, in contrast to PNC, the top 15 U.S. banks that Seeking Alpha has found at Safer Banking Research have low exposure to commercial lending, rely on much cheaper funding, have better operating efficiency, and have much higher capital adequacy ratios. The banks that they have identified also have lower shares of longer duration bonds. All good things. All in contrast to PNC. PNC could potentially be going down a very dangerous path, if not already on that path, barreling down this hill in this car with no brakes. There's only one way for it to stop. It's a crash. At the end of the day, we're speaking of protecting your hard-earned money. Therefore, it behooves you to engage in due diligence regarding the banks which currently house your money. You have a responsibility to yourself and your family to make sure your money resides in only the safest of institutions. And if you are relying on the FDIC, I suggest that you read our prior articles, which outline why such reliance will not be as prudent as you may believe in the coming years. And this is from Seeking Alpha. And in closing, it is time for you to do a deep dive on the banks that house your hard-earned money in order to determine whether your bank is truly solid or not. This is something that you're going to want to know now, sooner rather than later. check this out. I'm going to put it up on the screen so you guys can see it. Sign up for Moomoo, get your free stocks, link down below in the description. I'm not telling you what to do. I'm not telling you that, PNC is going to go out of business. I'm not telling you that the banks are going to all fail, but I am saying that, based on the information and the facts that we have available to us, the numbers, they're in black and white here. Some of them highlighted in yellow and green. They point into a direction that would have me concerned. Therefore, I would not want to be in a position to be vulnerable to the catastrophic meltdown and liquidity crisis loss that could be initiated by commercial lending loan default. I wouldn't want to be in a bank that's operating with similar practices of other past failed banks in just a few months' time. And I wouldn't want to be at high risk of deposits over $250,000, over the $250,000 FDIC insured amount, ultimately leaving me vulnerable and uninsured. 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 The stock market, other markets, other assets, other investment vehicles are great opportunities to diversify, protect. Remember, diversity, security, cash flow. I appreciate you guys watching. Please smash that like button, subscribe, turn on notifications. You guys take care, be safe, have an amazing and fantastic day. I'll see you guys real soon.